Hey guys, welcome back to the pod. I'm here with Paul from Morpho. Hey Paul,
Hey.
thanks for being here.
Yeah, thanks for having me.
Of course. We're here in beautiful Cannes. We are looking at the red carpet in front of us. We have the Mediterranean Sea on the right side, so it's a awesome venue right at ECC. But yeah, today what we want to talk about are all things Morpho, especially Morpho V2, which is on the horizon, about to come out. I already read a bit into the docs, not too much, but from what I've seen, I got pretty excited. I'm actually super pumped to see like whether it's a game changer in lending borrowing. And when it comes to trying to change the game, there I think you guys are always a candidate who have a chance to really push the boundaries. So I'm super excited to dive a bit deeper into how everything, what you guys are planning and how it actually works. But first, I would say let's start with Morpho V1. Let's start with the protocol, how it was or how it is today. And maybe especially let's start with the sort of different parties that are there. So Morpho V1 is a pretty complicated one. So yeah, what are individual parties doing? What are their responsibilities? Yeah, how does it work?
Actually, do you want me to go into more for V0? Because we do have a V0 before V1.
Oh, the optimizer?
Yeah, I can just say very quick.
Yeah,
lines
maybe just
about-
very quickly. Yeah,
Yeah.
for sure.
So I guess, we started 3-4 years ago with this first protocol that was actually built on top of existing lending and borrowing protocols. And so the idea is that you would deposit into Morpho Optimizer that we call now Morpho V0, and the protocol would deposit on Aave. But when a borrower comes to Morpho Optimizer, we would actually take the money of the lender out of Aave and give it to the borrower. And so we would create some kind of peer-to-peer matching on top of like the Aave lending pool. And so what that does is actually effectively better rates for both the lender and the borrower. So if, for example, the Aave rate is at 2 to lend and at 4 to borrow, well, Morpho Optimizer would offer 3 for both sides of the market, which was strictly better for both sides. And this is how we got traction, etc. Initially with the Morpho brand.
A great go-to market.
It was, right? And we can probably come back to that in Morpho V2. And also the reason I wanted to introduce Morpho V0 is that some of the ideas that inspired Morpho V2 come from this period of time, actually. But anyway, so that was a great product. We grew to $2 billion of deposits with this first version. We're actually the largest user of Aave at the time, I think. And we quickly realized really two things, is that there was a clear lack both of scalability and security in existing models. So scalability is obviously because like we were dependent on the asset listed by Aave, obviously sounded like we could do, we wanted to do like more assets, but Aave was not listing them. So as Morpho Optimizer, we could not offer them. The second one was actually, we had multiple billions of dollars in a code that was plugged on top of another code. And what was interesting to realize that from time to time, Aave received like a critical report and they had to upgrade the code to fix it. And when they were changing the lines of code to fix their bugs, they were actually introducing bugs into the protocols that were on top of them, right? And this is how we realized that, wow, this is why Vitalik talks always about immutability and the importance of immutability is actually that it is pretty annoying and unstable. It's actually, you can't build a multi-billion-dollar protocol on top of a protocol that itself changes its code, right? You have to have confidence on what the code is actually going to be. So this was really the inspiration for Morpho V1, is that we need something that allows for permissionless listing of lending markets because we want scale, and we want something that's immutable because we want people like we used to be, people that want to build billions of dollars on top of more products, on top of Morpho to feel confident. And so Morpho V1 is a stack as opposed to Aave that is a fund. So in Aave, you deposit your assets, they manage it for you. In Morpho, we are an infrastructure for funds. So we empower people to build their own Aave, quote unquote, where people can deposit their money into vaults, and we'll get back to that. And they manage the risk. We don't, right? So permissionless because we want scale, immutable because we want guarantees. And it's an infrastructure for lending and borrowing products, as opposed to like a lending and borrowing product in itself. So that's like the general, like high level description of what Morpho V1 is. And I can get into the two specific parts in a second. But today, after a year, it got like approximately $7 billion across a wide variety of assets and on 20 different chains. And the two parts are the following. You have a vault, which is effectively where people deposit assets. And this vault is managed, is curated. And it's effectively vault managers or curators are going to deposit that money into markets, lending markets. And so a lending market is where the borrower meets the lender. So it's specified by like a collateral asset, a loan asset, an oracle, and a liquidation loan to value. So, the use case and the risk associated to it, if you will. And so, it could be Bitcoin to borrow USDC priced by Chainlink and at a 80%, liquidation threshold. And so what that means is that as a borrower, you deposit your Bitcoin in the market, you borrow USDC, and if you are above 80%, for example, you'll get liquidated according to the Chainlink price oracle. So that's easy as a borrower. You know what you want to borrow and you know what collateral you have, so you know which market to choose. But for the lender, your intent is, I want yield on USDC. Well, you don't really know which market to choose, right? There are thousands of markets on Morpho. And so this is what the vaults are for. It's like you provide capital to a managed vault, which allocates to all those lending markets and all those opportunities. So that's the TLDR of like the architecture.
And so the one important party is the curator, right? So the curator is actually the party that takes the assets that are being lent out for the individual lenders, and they will decide, okay, I want to allocate to this market because it's safe. I want to allocate to this market because it's safe. And it's sort of like the risk manager on your behalf, right? It's sort of like the liquidity manager.
Exactly.
For you, right?
Yeah, we don't manage capital in any way like other lending platform would. And actually, the great way to understand this is that, Compound was used to be like the historic competitor of Aave, actually moved from the Morpho stack, right? So now they run Morpho Vault themselves, and Compound is a vault manager. And Morpho is just the infrastructure layer, the code, if you will.
Okay, so we basically have markets, right? Markets also like can be immutable.
Yes.
Then we have borrowers, they want to borrow. We have lenders, they want to lend. Lenders give their money, instead of deciding where to lend it out, to curators. Curators then decide which markets to lend this money to, like to give credit lines to certain markets, right? And then the borrowers just basically borrow, right? Based on the rates that are dynamically defined in like the curves that each market has.
There is an interesting parallel actually with Arrakis there, where so this is in the financing lending world. In the equivalent in the DEX/trading world is that the demand side, so the trader is the equivalent of the borrower, there is the market. And then you have the LPs, and LPs are complex, right? That they need to market make, quote unquote. And a passive user doesn't know how to market make, right? So they would probably use a vault, like an Arrakis vault, to be able to have someone market this for them, right? Yeah. So it's a similar setup.
Yeah. And I think there's actually a lot of similarities between spot market making, spot trading, and lending and borrowing, and the evolution of how it happens. I think we can go into this maybe a bit later, but I think maybe before we do, so Morpho V1, we just talked about it. So what were the issues you guys defined in this setup, right? So obviously Morpho V1 is not the perfect protocol, right? Otherwise you wouldn't have built Morpho V2. So what were like the problems or the, let's say, drawbacks of the system of each of these individual parties that you identified and you wanted to improve in the next version?
Right. So a lot of changes actually came from like changes in the market itself and the demand itself. So here are, let's say, 3 interesting ones. So the first observation is between the moment we started Morpho V1 and now, there has been a huge amount of chains being deployed. So many, many, many different chains. And Morpho is currently deployed in 20 different chains. And the lending network between 2 chains is completely separated. Like one chain from the other does not talk to the other, right? And so as a lending protocol, you have to bootstrap liquidity n times, right? Once for every single lending market you're in, which is frankly annoying, costly, because every time you need to bootstrap a lending market, you need some kind of like activation energy, right? To bring together the lender with the borrower, and this often takes the form of incentives, so that has a cost to like create and bootstrap a new chain for a lending protocol. And so that was the first observation. The second observation is that as Morpho got integrated into like wide distribution, there was a need for fixed rate that we had not felt before. So, we're integrated, for example, into the Coinbase platform, addressing hundreds of millions of retail users. And they're not leveraged along Bitcoin. They're just like buying houses or like, repaying.
They're not degens.
Exactly, right? And, the number one feedback that we got from this is just like, we need to fix the rate. Like, why the hell is this variable rate? And it's true that until then in DeFi, no one cared about fixed rate. But now that we're actually have actual usage beyond speculation, turns out fixed rate is super important. Super important for large scale distribution, but it's also important for institutionals, right? Where they all have their quant models, they all have like, in order for their model to work, they need predictability, et cetera, et cetera.
And actually also for protocols, like
Yeah,
in Iraq, we can talk about it later, but like if you are running a leverage loop strategy on like a stablecoin pairs and you want to have an idea of what your capital cost will be over the next couple of 3 months, it would actually be kind of great to have a fixed rate.
Yeah, 100%. And, there are ways to do fixed rate. You could do fixed rate on Morpho V1. You will be able to do fixed rate on Aave V4. There are fixed rate protocols out there, but none of those designs truly actually will provide like very deep liquidity on fixed rate market with like a market driven rate, as opposed to like a rate that's decided by the protocol to the protocol. And so that was the second observation. And the third observation is, third main observation, there are way more obviously, but it's like really the need for more personalized markets and just more flexibility in general, especially on like the whitelisting and blacklisting side of things. Like there are people you only want to trade with, or you want to avoid trading with. And, as a fully permissionless protocol, you want to enable the full flexibility for people to build not only permissionless markets, but also if there are specific counterparties they want to work with, they should be able to do that. And so those were the three main things that inspired, I think, Morpho V2.
So the first problem, like chains and you having to constantly bootstrap, I think this is probably an issue. Like it creates liquidity fragmentation first of all, so this is bad for users and borrowers and lenders, right? It also maybe is an issue for applications or new chains that want to access liquidity. Then you have the flexibility issue, which is probably for curators. It's like it has an implication on what lenders and borrowers, right?
So it's more like for if you're a large scale distributor and you want very specific, like you have very specific constraints for your user base or your traders if you're in institutions. Maybe Morpho V1 did not offer you this flexibility that you needed, right? So fixed rate, like being a good example of that.
Yeah, and I think as a curator, if you want to differentiate yourself in the market and offer, let's say, more sophisticated curation strategies, then I think the V1 was providing you with a tool set that was like good, but I think it was very hard to provide like a differentiated product, I think, to our.
Yeah, it's an excellent point. Like, and actually one of the key motivations of Morpho V2, I should have mentioned it, is right now, when we launched Morpho V1, it was the very first time we were thinking of a protocol not as like a fully autonomous primitive, but rather like as an infrastructure. Like the protocol was not issuing the loans itself. It was thought as an infrastructure that people would use in order to issue loans. And we were a bit scared initially that no one was going to actually become a curator. And we were scared that the threshold in order to become a curator was too high. And so I sort of set the bar very low because I really wanted to make sure that we, actually have success in this, like really this model that fundamentally shape the way people see DeFi now. I believe that the term curator that we coined for Morpho V1 is actually now used in like pretty much every single protocol. And so that was the reason we wanted to limit the dimensions of flexibility and angles of differentiation for vault managers in the first place. But now we have like 30 different businesses built on top of Morpho, right? So we can't really afford to now we want them to have more flexibility. We want them to be able to innovate more, to do more interesting things. And Morpho V2 is also built for that.
And I think it's actually probably it was a good call, probably in retrospect, I would say. Just as someone who has built on top of, let's say, similar peer-to-peer or more like custom, like Uniswap V3, for example, I sort of always called the liquidity computer. So you can basically define yourself how you want to create a liquidity curve, a strategy. You have full discretion over how it should work, look like, rebalance, whatever. Uni V4, of course, giving you even more tools, but it's basically hooks, right? And like a couple of more capital efficiency gains. But it's like it turned out to be extremely difficult. Like spot market making is just like a very difficult thing, and that's why actually not that many sort of strategists, or like you can call them curators, right, popped up on Uniswap before. There are like a couple, but like rather smaller,
Right.
I would say. And so I think limiting what you do and basically providing like cookie cutter strategies or like tools makes it easy, and probably is good to bootstrap something like this. But of course, at some point you have competition. At some point, people want to differentiate, and they need more flexibility, more ways to differentiate, and get their opinion, like get their opinions into flown out to strategies, basically. So Morpho V2 aims to be that, right? Morpho V2 aims to be more flexible. There are some very core innovations of how you think about loans on the base layer, right? So maybe like not like just like very short, like very briefly, like how does Morpho V2 work on the core? And then maybe I think what's most interesting for me is how does it affect each of these parties, and what is different now from how they interact with it?
Well, I'm still learning how I myself pitch Morpho V2, but I really think of it as it's a fixed rate lending protocol at the core that gets abstracted through vault and aggregators, quote unquote. So think of it really same as like Morpho V1, except now that the core market, instead of having like an interest rate model that's going to have, the rate spike statistically, depending on the amount of utilization of the capital, now you have some kind of zero coupon where you have a fixed rate essentially, and the rate is determined by a market as opposed to by a formula, right? And this tiny difference changes everything in the way curators are going to operate, but also how users are going to be able to access liquidity, especially on the liquidity fragmentation side of things, and on like how we approach Karst chain and all those sort of things. The zero coupon primitive is a much simpler object in itself than an interest rate model or a lending pool, and that allows for a lot more flexibility and innovation that we initially thought it could possibly do. And so it's intent based. It's not a pool anymore. You don't allocate your capital in a pool and wait for borrowers. Instead, you write an intent about what you want to do at a fixed rate. Yeah.
Okay, so the zero coupon bond, right? So basically, you don't have a defined interest rate. You have a sort of discount to the price at which you will receive back the principal, and based on the duration of the bond, you will then have a certain implied interest rate that you want to define, right? But maybe you can refinance or whatever before the end of the maturity. Okay, so me as a lender, I define an intent.
Right.
As a borrower, do I define an intent as well?
So let's forget about Vault for a moment and just focus on the core protocol of Morpho V2. So the way it works is very simple. You as a lender or a borrower, so whether you're a buyer or a seller of the bond, you are essentially going to express your intent and say, hey, I'm a lender. I'm willing to lend USDC against BTC or against ETH, right? And for BTC, I'd like to be priced by Chainlink, but I don't mind if I'm priced by Redstone. And we're gonna settle all of this on Base or on Arbitrum, right? I'm also fine maybe with whatever chain that is run by Gelato's RAS, right? And so you write all of this in an order that you sign, right? Then you broadcast this order into a mempool. And then any borrower can scan the mempool, right? And give it for a given intent. This borrower is going to filter like all the offers that correspond to this intent. So say you want, as a borrower, Bitcoin as collateral to borrow USDC with only Pyth Oracle, say. You give this intent to the mempool. The mempool is just going to give you all the offers that have been written by everybody, likely creators, but we'll get to that. And then you take those trades, right? And so it's obviously abstracted from the eyes of the borrowers, but it will take all those bonds together, those offers together, and it will you will be able as a borrower to borrow money from the bonds essentially. And this settles on chain, right? In the smart contracts, that is essentially very close to the existing smart contract of Morpho, right? Is the only difference is that the order matching is done off chain and the interest rate is determined by the market in the offer.
So going deeper here, in Morpho V1 you had a curator. The curator worked for the lender. The lender came in and the curator said, okay, I will help you get the best possible risk-adjusted yield for USDC or whatever you deposit, right? The borrower was on its own. The borrower went to a market and said, hey, I will provide my collateral here and then I can borrow against this, right? Now you have Morpho V2. I, as a lender, obviously, I have no fucking idea how to construct an intent and what oracles to like whitelist, like sign in my intent and what chains are cool. Maybe I can probably define myself, but anything else than the asset, the chain, and maybe some risk adjusted stuff, I will probably outsource to someone else, the curator. And the curator has a sort of intent, a blueprint that it creates, and I will be leveraging this on a UI or something, and I can put in some options, and then that's it, right?
Yeah, that's exactly it. And obviously, not to undermine like the work that curator will have, is actually a lot of work to go through like all the collateral asset that they could potentially accept, and then all the oracles for each of those assets, what would be the liquidation loan to values, and they would write all of this down and give a price. So maybe you have a USDC vault and you have 100 million in it. You can effectively offer this 100 million to borrowers that are collateralized with BTC, some that are collateralized with Uni, or some that are collateralized with Doge. And maybe you want to give them a different price, right? And so you can do that, right? And you actually set the price. You do not have to obey to an interest rate model or a formula, right? You can actually give a price to like the different bonds that you could be fine trading with, right? And what's interesting in this intent is that your 100 million is committed to all those different collateral assets at the same time. And that's the key main difference with lending pool. In a lending pool, you allocate capital and you wait for borrowers that are compatible with this pool to come, which restricts yourself from lending to other borrowers. In Morpho V2, you promise capital to N kind of borrowers at the same time, on N chains at the same time, on N KYCs or permissionless at the same time. And that's way, way, way more powerful because with just 100 million on one chain, for example, you can have your borrower interface, whatever the network you connect in, you'll see 100 million available to borrow on those chains, to the extent that the intent of the lender was specifying those chains, obviously. And this is not something you can do with a pool. This is not something you can do with like AAV4, like whatever protocol that is leveraging a pool. This is only possible through intent, right?
Quick question here, just out of curiosity. Such an intent, in theory, would it be able to be used on other lending markets as well that are not Morpho eventually? Or
so
like an intent from CowSwap being able to leverage liquidity from any kind of source?
So the intent language that we have is specifically for morpho bonds, like the way you formalize, like the intent, etc. Obviously, anyone can come up with like their own language for intents and say, an intent is essentially a way to express like what's your, your will, what you're willing to do. So someone else could have like a separate mempool and a separate network and actually create those intents if they wanted to. And we're, obviously perfectly fine with this.
Well, I could build a lending market for like just out of theory, like just
Yeah.
out of fun, right? I could build a lending market that accepts your intent interface.
Yes.
And then people could just start.
Yeah, 100%.
Right, yeah.
No, 100%.
It's a cool thing about intents.
No, that's exactly something you could be doing. Actually, two things on top of that is in your intent, you specify something which we call a callback, and which essentially is a callback. It's a piece of code that essentially says where the money is coming from. So maybe it's in your vault, right? As I'm Gauntlet, I'm Steakhouse, I'm Mary7, Block Analytica, etc. I specify like that the money, the 100 million, is currently sitting in the vault, but maybe this money is deposited somewhere else. Maybe it's deposited on Morpho V1, right? Maybe it's deposited on another yield opportunity, right? And so if you come back to V0, you actually end up in a situation where you have a lending pool where the capital is deposited waiting for a match, peer-to-peer. So I won't go too deep into that. We have a few announcements coming on that front. But you can kind of get the idea that Morpho V2 brings new things, has inspiration from Morpho V1, but also has the superpower of Morpho V0, which was the capacity of piggybacking any liquidity from any lending pool.
Okay.
So yeah.
What about the borrower side? So the lender has the intent, it constructs this, right? So I give my funds into a vault. There's a callback defined. Bunch of opportunities always opened up with callbacks, right? You can interact with any sort of other DeFi protocol. I think it might actually be very cool with like hooks and so forth, or Uniswap. Maybe we can brainstorm about a couple of ideas that can be built eventually, right? Sure. But the borrower. So I'm a borrower. I usually deposit in V1 my collateral assets into a market, right, that I specify. Now, how does it work now? So I also create an intent, and how does that work?
Right. So Morpho V2 is completely symmetric, right? So if you're a lender, you buy a bond. If you're a borrower, you sell a bond. And it's very close to a trading market, actually. And so the way it works is that on both sides, on the borrower side and on the lender side, you have two kinds of personas. You have the taker and the maker, right? So you have people that generate offers. And so those offers are created by the maker. So you can make a lend offer. This is the one we discussed. I have 100 million. I'd be fine borrowing again, lending to Bitcoin, Uni, etc. So that's a lend offer. You could make a borrower offer, and you could say, "Hey, I'm a borrower. I have Bitcoin as collateral. I'm, willing to accept XYZ as an oracle, or I'm willing to accept XYZ like a stable coin, for example, that I want to borrow with this." And if you're agnostic between USDC and USDT, you could say it, right? So those are the makers on the lender side and on the borrower side. And then you have the takers, right? And the takers are people that have maybe on the maker side, I should specify that you specify a limit price, right? And then on the taker side, you already know what you want. You want to execute right now. Like you want to take a loan right now, BTC to borrow USD. Mm-hmm. You have a Uniswap-like interface. You set BTC, USD, and then, the interface has a router similar to Uniswap that is just going to source like those offers in the ordered by rate, and then just gives you whatever quote is available at the moment on Morpho V2. And so this way you can take a loan, a fixed rate loan. But that also works for the lender. So the lender, you could say, "Hey, I want USDC." And usually you would deposit in a vault, but if you wanted to take at the market level, you would say, "Hey, I want USDC and I want to lend USDC and only for Bitcoin collateral." Then you could have a similar router that sources like the bonds and stuff that you could buy. Mm-hmm. So yeah, it's completely symmetric.
Can the borrower also, let's say I'm a borrower, right? I put in BTC as collateral. I then wanna borrow stables. Let's say I wanna borrow DAI or DAI USDC, USDT, whatever. Can I specify that the debt that I'm taking on can be any of these assets? And
Yeah.
okay, so you can actually rebalance. Like someone can come in.
So once it's settled, though, it has to stay in the same assets,
Okay.
right? So, but when you make your initial offer and you say, hey, I'm a borrower, but I don't mind if it's like, a stable coin A, B, C, D, then you can make this
It
like,
will basically be matched at whatever is
yes.
the best
And maybe a
price.
curator of USDC sees this and is fine with it, or maybe it's a curator of USDT, right? And this is how you could tell that in Morpho V2, there is no liquidity fragmentation. Like it's not even a concept because everything that can be matched will be matched. People that are compatible will be matched, right? It does not matter if you don't have the same stable coin because like in other lending protocols, like if you don't have the same stable coins, well, you can't, if there is no liquidity, you can't go, right? And maybe you would have been fine, lending USDT as well, and you did not care, yet you were not able to meet the borrower because you could not express your intent fully, right? And I think this key small difference just makes such a 0 to 1 change. Like my personal opinion is gonna completely reshape lending as we think about it. It's extremely powerful. And so anyway, obviously biased here, but I think very highly about this.
I think it's basically taking the learnings that we saw with on-chain spot trading or DEXs, right? That evolved from a sort of like pooled model with like Compound, Aave, and so forth, which was like Uniswap, the V1, V2, right? We had a fixed curve. Everyone was trading the same sort of strategy. To then Morpho V1, where you have like different markets and so forth. They're all isolated. You maybe have like different sort of like curve pools with like different sort of curves a bit, but they're all like kind of like isolated and can't interact with each other. You have like a Uniswap V4 singleton contract where all the assets are placed in, and anyone can define their own hooks and pools, and no one really knows how to interact with it at the moment still. Because it's highly complicated, but it's fully based on solvers actually doing a lot of off-chain hard, difficult work of like trying to see which routes actually make sense, and then you get the best capital efficiency. You can always have like the basic sort of pools and so forth built on top that everyone uses. Okay, this is just like the full range. Let's say Uniswap pool can be built on Uniswap before, but the real magic happens when people figure out how to go extremely concentrated and active.
100%. Yeah, 100%. I think that's the natural path for the two, like both trading and financing primitives had to go through. And you can't directly go for the end game because, as you mentioned, with like hooks and like more active market making, you need to grow your community. And what I mean by community is like the builders and how complex they are and how much money they make, etc. Has to grow with the complexity and the modularity of your protocol. If you go with something that's too modular initially, people will just not like, if Uniswap had started with Uniswap before, I don't think it would have worked as well as Uniswap V2, for example.
And yeah, this will definitely take a bit of time, right? I think I'm still surprised even today. Like we are launching with the Ruckus. We have our own custom hooks that do dynamic fees at some point, as the reapplication, these sort of things, and like it takes a long time and hand-holding for aggregators and solvers to find that liquidity. Like they don't just find it. You have to like tell them how to find it. You have to sometimes even as a builder who doesn't want to, like, for example, we are not solvers. We don't want to be a solver, but we had to build our own solver because no one else was finding that liquidity. And then if the other solvers see your liquidity, then they're like, okay, there's liquidity, and everyone starts racing and like trying to capture it. So I think that's why also Uniswap V4 is still, it's super powerful, it's amazing, but it still lacks a bit adoption. Of course, the majors all directly moved over it, right? Like the big markets, they benefit from the customizability, but other people, like you really need this infrastructure around it to make it work.
Yeah.
And it takes some time if you want to do it securely. And
it does, like, and I know Uniswap is building like a ton of things to help builders like build hooks, but it really takes a huge effort to build this community. And
it's that, and the hooks is one part, but then like finding the liquidity, how do you interact with it? And if you think about asset rehypothecation, okay, liquidity doesn't even sit in Uniswap; it's somewhere, let's say in Morpho. Okay, you have to know that this liquidity, if you transact and interact with this hook, will be there.
Right.
Like,
Yeah. So you
you
have
need
to, like, solvers have to integrate all of
Yeah.
this. So they come up with heuristics sometimes,
Yeah.
or some try to have like the full simulation engine, that can, for any hook, simulates any outcome and see if the liquidity will be there. But then it's super expensive and super heavy. So yeah, whatever.
And you need to sort of like have like an API that basically sort of aggregates this order book and finds these liquidity spots and then make it available. This is a startup you can sell to curators probably at some point, because this is a whole indexing solving issue that will be highly complicated. So just going back to the borrower. So I'm a borrower. I have all these orders there. Is there a way for me to mimic? So you said like Morpho V1 will be part of this, right? If I just want to have like a fixed rate, a variable rate loan, like how will basically this variable rate loan just be done by like Morpho V1 being like this one market and they will just provide it, or how do you mimic that there?
So at the core protocol, it's bonds, so it's fixed rate. On the lending side, you don't want to be doing those quotes and it's too complex, so you just use a vault, right? And someone is going to do it for you. On the borrowing side, you usually know exactly what's your intent. So if you want to do fixed rate, you could directly go to the protocol. If you don't want a term to your loan and you want to borrow in perpetuity, right? And there is a good audience for that. You could either go to Morpho V1, which by the way will be maintained, and we are gonna grow this to like the 100 billion, I hope. But you could also roll fixed rate loans, right? I don't want to share too much about this because this is like not stuff that we haven't published, but a few ways you could go about this. Maybe Gelato could be also involved in all of that. But yeah, so it's the way it's done in Strat5 for most of it, is like actually rolling like fixed rate loan, and this is how you get like variable.
This is how you get in perpetual loans. And okay, makes sense. So for the lender, I interact with the curator. Nothing really changes except the curators have way more power to like find interesting borrowing opportunities, manage risk, and so forth. And then the borrower, for now, like borrower has the ability to get fixed rate loans with a certain duration. I heard this duration also like match with like certain like dates, right, to make it easier for like redemption liquidations and so forth, redemptions. And then I have a fixed rate loan, and there are ways to mimic basically a perpetual variable rates loan with like hopping over from one loan to another, basically, right? So this, of course, so I want to talk about the business side a bit, but maybe last technical question is, you mentioned that there will be like intents basically define where your liquidity will end up and be borrowed. And then if I start on Ethereum, I have my intent and say like it can also be on Base, right? Then someone from on Base might borrow it, and then it's on Base, right? So how does I heard that there's no enshrined like bridge or cross-chain messaging protocol, something is just purely an intent. But so does it mean that you don't need that the liquidity doesn't have to be on the specific destination chain where you want to borrow or lend it out? You can lend it out anywhere, and the borrower can borrow it anywhere. Will that mean that it basically means that I spin up a chain, I want to enable people to go leverage. They can just like create a borrow with all the liquidity available that specifies their chain as in their intent, and I have access to it right away.
Right. So the way it works is in the intent you specify. So the protocol is immutable permissionless, right? Like, and does not enshrine any bridge at all. And the way it works is in your intent you say, hey, I'm fine settling the loan on chain ABC, and in the callback you specify where the funds are and you specify how they can be fetched, right? So if they are on like base, for example, you would specify a callback that specifies the address and how to fetch it with like a bridge, for example, right? And so the taker, you know, if it uses base, well, it won't bridge anything. But if you're coming from Arbitrum, you would execute the callback, which would execute the bridge, which would settle cross-chain the loan, right? And
So do you always get it back on the chain you started, or
so the loan settles where the taker
takes it?
takes it,
Yeah.
right? So it could be the lender if the taker is the lender,
Okay.
right? But in this example, it would be the borrower, and so yeah.
So my funds, I landed out on Ethereum. I whitelist all the like base Arbitrum, whatever. The borrower can borrow it on Arbitrum, and then the loans matures, right? I get back the principal, and in this intent, I have already defined that I will get it back on Ethereum.
Exactly.
Okay, so this is where the callback comes in, that a solver can
Exactly.
fill, that then uses wormhole or hyperlane or whatever.
Exactly.
Okay, cool. That's super cool. I guess
I think just to emphasize this, I think it was really important for us to externalize bridge management. And I think another way we could have gone about it is like we keep the pool model, we start entraining bridges, and then token governance has control over risk parameters, bridge parameters, etc. And it's just the opposite of our vision, which is much more free market oriented, and we want the vault creators to be deciding for which bridge they want to be using, because it's part of the risk.
And it should also be they should be using the bridge that has the best liquidity at the given moment in time, right?
Right.
So you need to
exactly.
If there's a bridge that it doesn't have liquidity, then you can't even get it back. So
exactly. And so you need dynamism, you need people to be monitoring, and it's just like at some point it has to be the free market take, because if you really truly are ambitious, and it's just like a general take, like if you truly are ambitious about like what crypto is going to be, the number of tokens that are going to be out there, the loans that we're going to issue in over collateralizing, but also potentially in the future in credit, it just can't be one single DAO issuing all of those loans, right? You have to make a lot of friends that are the builders that will actually curate all of this and source new risks, new opportunities, and make the network stronger as a whole.
Yeah. Super cool. Of course, like if you have a new chain and your chain ID wasn't part of the intent, then you first have to lobby the curators to like add you to it, right? But I think they will probably like can the curator can't update the intent on the fly, right? It's just like you
can cancel. You can cancel.
Well, you have the user, you come in, you update it, right? And
so you can cancel your offer.
Okay. Can you just let curators say like, hey, you can decide which chains are fine for me, and then they can do it, or?
Oh, you mean as a
lender?
As a lender. So yeah. So in the vault, the vault manager can specify, hey, by the way, we're gonna settle on chain XYZ, right? And it's part of the guarantees that the vault offers, right? So one vault could say, hey, we're just gonna do stuff on Ethereum. We're not gonna touch on the other chain.
Okay. So the curator manages the vault, right? And then so I'm a new chain. I want to have access to more for liquidity. Then I have to actually lobby the curators to get liquidity.
They have to be fine settling with you, right?
And there has to be still the Morpho protocol has to be deployed. Right, but it's not like it's way simpler for you guys. It's like
we're just deploying.
It's like safe, just deploy it. But if you want our UIs and something, then it's a bit different.
Exactly, and all of a sudden, Morpho becomes this sort of like chain agnostic network.
It's a protocol, right?
And that's where intents can flow from one chain to the other, and we sort of like chain fragmentation and liquidity fragmentation as a whole for Ethereum through this.
And then you need to work with the curators have to be like supporting your chain, and they will have to be fine with the risk parameters, and they will look whether it's like a secure L1 or whether it's not or whatever, right? So cool. Let's make chain like if you believe in the thousands of chains story, then of course it's very, very helpful to expand, right?
No, 100%. And whether you believe it or not, the reality is that there already are hundreds of chains, right? It's already the case, and we have to build around that. And maybe eventually, like in 5-10 years, we will reconcentrate over like a Ethereum ZK EVM and Shrine, like whatever Vitalik comes up with. but I think like in the meantime, like we're at ETHCC. Robinhood announced their Robinhood chain. We can suspect that everyone that has distribution will want to containerize distribution. And so it's for us, like the protocol builders, to figure out, hey, how do we connect liquidity between those? So yeah.
That's a really cool model. Of course, like these fixed rate loans, fixed rate rates, they are very cool for, like, let's say the Coinbase crypto-backed loans use case, right? That I think now has over, like, I don't know, was it 400 million loans that are written or something?
500, I
500,
think,
right? Okay.
and 1 billion of collateral.
Okay,
or
yeah. So
something.
500 already. Last time I checked, like 2 weeks ago, it was like 400.
It grows quite fast.
Yeah. And of course, all of these guys, they shouldn't be offering variable rates, right? They want fixed rates with a certain maturity, like they're used to, and in Web 2. So it makes a ton of sense there. Of course, we had like a cool collab recently, Gelato and Morpho. Check that out if you haven't seen that. So I'm super excited about this, and fixed rate loans make it even cooler. But what would you say? So this is, of course, like a pretty obvious one, which is cool. But what would you say? Like, what is maybe some, like, if you guys have thought about what is like your cool secret thing that this enables? Like, think about something like, okay, what Arrakis could be building or stuff like this. What is like a cool thing that this enables that maybe some people haven't thought about yet?
You mean, what are the cool things that Morpho V2 will enable?
Yeah, exactly. Yeah.
I mean, one that we realized along the way that is insanely cool, in my opinion, is that effectively now we give curators the ability to price risk, right? To price how trusted the promise of repayment of a given borrower is, right? And they do this, they measure trust by giving an interest rate, right? And they can do that because they can assess the collateral assets. They can assess the liquidity of the collateral asset, the liquidation loan to value, the oracle. There's really no reason we should just stop here. There are other ways to bring trust, right? Identity, risk scores, like credit scores, etc., etc. So in a world where you're a borrower that comes up with all of that on chain, if we have a strong enough network of curators, they could come up and say, hey, you don't have any collateral, fair, but you are this person, and if you don't repay, your credit score will be impacted in this manner. So what effectively we realize is that this structure is extremely natural for under-collateralized lending and credit, right? So yeah, I'll stop here without leaking too much.
Under-collateralized lending, of course, enables a bunch of cool use cases. And you could even think about, in short, via restaked ETH or whatever, right? There are a million really cool things and cool projects building primitives right now that could be built on top of this, right? So
Yes.
I think you guys are going into like the protocol approach, right? I think all of the other lending markets, they really went into like, we are becoming our own asset allocator, and we are becoming our own credit facilitator. And we enshrine this. You guys go deeper into the route of what Uniswap also does, is we build a protocol where other people can do it. You have to deal with this. Of course,
100%. Yeah. And I think, for a long time, people have been comparing Morpho with Aave, like for the last year or so. I think now with Aave V4 and Morpho V2, people kind of realize that we're not doing the same thing at all, right?
Very different things.
Like Aave is building a bank for crypto users, right? And it's a great bank, but they manage everything. They manage the bridges, they manage the risk, and it's like a big part of capital. Whereas Morpho is really the free market vision, where like it's a protocol that allows people to do stuff like what Aave is doing, but in a permissionless way.
Yeah. You're an open source tool that allows them to do it, and you provide the core primitives and the sort of like an opinionated rule set by which you have to play, which provides us a lot of flexibility now, basically. I actually want to, like, maybe one cool thought popped into my mind is like, because we had seen a lot of the fusion between like spot market making, trading, lending, borrowing. If you can actually go into like on this order book, if you can actually use this to settle trades and rebalance positions by repaying, like basically borrowing here, repaying loans here, and basically build these meta layers on top of Morpho where you can fill trades with the liquidity that sits in this order book and just rebalancing loans and like basically debt positions here and there. This is like sort of in like the direction that like Fluid went, and the guys there from InstaDebt. They basically have this like smart debt on smart collateral where you have you can borrow and define like, hey, you can borrow DAI-USDC, and people can trade against this because they can repay your DAI loan here, and then they can borrow a USDC here, and this is effectively a swap. It's actually just like repaying a loan here and then borrowing here. So it's like interesting primitives can emerge that at the end of the day provide greater capital efficiency, especially great for correlated assets. It's things that we also explore on the Arca side right now. Definitely we'll have a deeper look into Morpho V2. So definitely let me know when we can get a hand on it and have a look. Cool. So maybe like last question here before we wrap it up. I think I could go another hour to talk about technical details here, but this is of course a big step. This is a pretty big, I think, evolution in on-chain lending markets. Super excited about it. First of all, congrats on a cool idea. Looking forward to see how it will materialize. Where do you see this trend going in like the next couple of years? Like, where do you see? How will lending borrowing look like? Like, will we have hundreds of these curators getting in, like pricing, like creating these orders on this order book every day, like every like microsecond? Or how do you imagine this will look like?
I think the long-term vision is. I took a lot of time thinking about what is a loan, right? Like at the end of the day, and what are we truly building here? And as I was mentioning a little bit earlier, lending is like a borrower is effectively making a promise of future value to a lender, right? And a lending infrastructure should be like the mechanism through which those loans get issued, quote unquote. How it's a mechanism to price the trust that you have in this commitment of future value, right? And like 10, 20 years from now, I think of like the financing protocol of the world as like some kind of internet protocol that, you know, on one hand, you have people that have a need for financing, and on the other hand, you have anyone that has an excess of capital, and that maps the two in the most efficient way possible. But most importantly, I think it's just the way humans make commitments to one another, and the trust that you have in this commitment will effectively be priced by this same engine, right? Because as everything gets tokenized, right? And I do think everything will be tokenized. And as everything move on chain, and I think everything will move on chain, all the commitments that we're going to make to one another will leverage tokens and smart contracts. And I think the role of Morpho in all of this is to facilitate trust between all those players. And yeah, it's a bit abstract, and it takes the form of crypto-backed loans and then credits, etc. But I actually think there's potential for even more general things we could be building.
And it's the core borrowing, lending, trading are the core primitives on top of on top of which you can build basically any financial product.
Sure, like financing is the cornerstone of finance, yeah, and just how do we foster trust between humans beyond culture differences, country differences, etc. And yeah, I feel grateful to build in this industry because a fun story is that I initially thought of finance as a very extractive industry. Like you move value around and you extract value out of this without creating value out of itself. And then I came to realize that it was actually an infrastructure that, whose role is to foster trust between humans and the collaboration between humans beyond like differences. And this is what drives me like in the day-to-day to build Morpho.
Perfect way to stop the pod. Thanks, Paul, for jumping in. Of course, it was great. I think maybe we can do like a second version at some point once Morpho V2 is fully shipped and maybe the first cool use cases have been built, and we can talk a bit more about like some other cool things that are being made possible by it. But yeah, thanks a lot for coming on. It was great, and yeah, see you next time.